who will introduce our speakers once again. Thanks.
Thank you very much, Erlan. And the floor is with Serkan. Coca-Cola, thank you. I will echo Erlan for sponsoring this event and actually the whole idea of Get Together. And this concept belongs to Coca-Cola, I have to say. We started it with Shut Up. So it's an excellent opportunity to continue. Thank you.
Thank you so much, Julia and Erlan, for the kind words. Good morning, everyone. And big thanks to actually EUROBAK for organizing this event. Also our speakers who will enlighten us about the future of Kazakhstan, the economical trajectory, and also participants. Today I'm very curious about listening to the expert views on the Kazakhstan economical growth, because in 2025 has been a very good year from a GDP perspective. It grew thanks to the oil output. But on the other hand, Kazakhstan government has a big ambition to become top 30 country in the world by 2050. And they put lots of efforts on the diversification part of it. And today, again, the output came from the oil, but there are lots of efforts about the manufacturing, about the IT infrastructure, becoming an IT hub of the region. And I'm sure that these efforts will pay out. I'm quite optimistic about the future of Kazakhstan. And usually when we talk about Kazakhstan or Central Asia, we use volatility. But also watching the global news, the US, I think today Kazakhstan is more predictable than many other developed countries, including the United States. So I think we are using volatility more of a habit rather than a fact. On the other hand, 2026 will be a different year because as much as I follow, I expect the GDP growth will be still there. Maybe not as much as 2025, but still Kazakhstan will grow. Tax code is changing. Inflation is rising. This might put pressure on the consumer side. So it will be very interesting today to understand how it will be balanced, how the government will manage it, the growth, the deficit, and also the inflation part of that. And it's also very important for our business because not only Coca-Cola, but also our competitors are quite optimistic about the future of Kazakhstan. We make big investments. We opened a new plant in 2024. Now we are building a new one for 2027. PepsiCo is also investing a lot in the country, which is very good because it looks like the whole industry is on the same page about the future growth. Another part of that's similar to the maybe a bit on the negative side with the rising inflation and pressure on the consumer. What will be the regulations happen, especially track and trace and a possible excise tax might disrupt the growth of the industry. But we are working very closely with EUROBAK, other NGOs and also government parties to make it better understood the industry needs and to make wiser decisions for the future of the country. I don't want to take a lot of time. Thank you very much for coming today. And I'm leaving the word to Mr. Özhan.
Perfect. Thank you very much. I don't have all the answers. I was asked to give a presentation on the economic outlook of Kazakhstan, as well as actually Central Asia a little bit, because the presentation was prepared that will take into account, in some instances, with competitive data from the Central Asia, but also our countries of operations where EBRD operates. We are a regional international finance institution that currently invests in 42 different economies around the world. So can we get the presentation up if possible?
Yes, presentation is ready. Just a second. Okay.
While the presentation is being up, I also would like to thank, first of all, everyone who joined today. It's a full house. That's wonderful to see. It's extremely honor and pleasure for me to meet all of you. It's a good opportunity to get together, as Erlan said, with all of you, to have little chit chats on the side and also have the chance to talk about what's happening in in Kazakhstan particularly, what are the thoughts, particularly from the real sector, as most of you represent the real sector in Kazakhstan, which is becoming increasingly more important. So let's see if the clicker is working. Perfect. Everything is good. So this is my first slide. I'll start with the trade as well as the policy uncertainty that we faced when you look at the past 25 years. Particularly, you can see that under COVID, we have seen quite a bit of spikes in terms of both on the trade side as well as because of the supply chain disruptions, etc., but also on the policy side as well. But the peak that we have seen is April 25. Particularly, this is about the unknowns surrounding the U.S. tariffs and the reciprocal measures by the U.S. trade partners that have taken, which has taken us to record high levels. It has abated since then. I mean, we have the data until May, but when you actually elongate that data, which is going to come out in the year end, we will see a bit more easing of it, but still we're at higher levels. So the tariff increases so far, it's been 10% baseline tariff for all imports, country-specific tariffs based on the trade deals, of course. The trade deals continue since the initiation of these tariffs. There are both categoric tariffs as well as the unilateral tariffs that has been put, for example, 39% that was put on Switzerland earlier. But certain exemptions continue to be made, including the energy and energy products, making the effective tariffs actually lower. So the effective average tariff rate on US imports from particularly across EBRD regions, which are the countries that I mentioned, that increased almost twice to 2.7 percentage points from 1.4 in the first half of 2024. Indexes of trade and economic policy uncertainty have come down from the peaks, as you can see, but do continue to be high, and the volatility is continue to be expected. I want to make two more points from the recent developments. So you probably all followed last week. There was the Central Asia 5+1 meetings in Washington, D.C. This was with Trump and a number of deals that was announced and made over there. This is also quite important to manage the negotiations, I think. And secondly, again, in the US, there is increased scrutiny on the legality of the implementation of these tariff increases as well. So, you know, particularly the discussion is around the powers given for the emergency situations versus how it was implemented. Clicker might not work. Let me try. Next slide. There you go. So let's look at our region, Central Asia mostly. So the effective tariff rate from the US is relatively low. And the real impact was basically felt, particularly by China, who was already facing high effective tariffs. Germany, and as the EU's manufacturing powerhouse, has also been affected at the time. In contrast, Central Asia, our region, have seen limited direct impact. While the tariffs increased globally, the Central Asia economics benefit from the exceptions, that's number one, and low tariff volumes are also, low trade volumes are also important that they're not affected much. So in 24, trade with the US accounted for about 1.2% of the total trade turnover in the region. And export to US remains around 2% of total exports across the region. So the main trading partners of Central Asia, which is the more important for us, is China, Russia, and the EU. So unlike China, where exports to US represent 14% of the total exports, the initial data suggests that Central Asia exports have grown, even with Chinese exports to the US have declined. So while the direct exposure is low, tariff increases could indirectly affect our region as well. Because of the strong trade links with China, of course, a significant trading partner, as I indicated, with the region. So initial signs, again, when you look at it, I also highlighted Kazakhstan there, show that about 5%, 4%, 4-5% of the total export volume is with China. So despite global uncertainty, let me go back, yes. Despite the global uncertainty, Central Asia projected to lead growth amongst the regions. You can see that these are the a few regions of we have tried to accumulate and indicate here. Particularly, we 3 times a year we update our macroeconomic data. And one of the very few regions in the world for updated economic data for 25 increasing the GDP was actually Central Asia, averaging more than 6%. So here is particularly the specific data about the region. So the 24 data are the realized. 25 data is the forecasted data for the GDP growth, and the green dots that you can see is our May forecast. So you can see for Kazakhstan particularly, we have increased our forecast for growth for 26. Sorry, yes, for 25, and 26 is going to level out around 4.5%. So when we look at Kazakhstan's economy now, we can see that it maintained the strong momentum in the first half, with GDP expanding 6.3% on a year-on-year basis. So the growth was, of course, largely driven by the higher oil production at the Tengiz field, which Serkan also alluded to. This also important to note that Kazakhstan this year particularly was producing more than the quotas that was set by OPEC Plus. And this is a trend from 2024. And this was also supported by the industry growth. And this helped also the related industries like the pipeline, as well as transport and wholesale trade. You can see that construction, let me go back. The clickers I'm having troubles with, but we're on this slide right now. Domestic trade remains strong, reflecting a robust household consumption. So the consumption continues to be high. This is fueled and supported, of course, by the financial institutions, banks particularly, with increased consumer lending. But as a result, you will also see additional inflation, which I will come to it later on. And Kazakhstan has the highest inflation rate at the moment in the region. So this is something to look out to. So according to the short-term economic indicators, we do have a specific indicator set that we look at. This indicator continues to be strong, and it's continuing to be stronger than the actual GDP growth. For us, this indicator is around 9.1% for the first 9 months. Here, I would like to have a quick look on the energy sector. We can see that oil and gas production growth is driven by the gradual ramp up in the production of the expanded Tengiz oil field in late January. Kazakhstan repeatedly overproduced the OPEC plus quotas in 24 and 25. But we understand that there is certain flexibility in this, and the revised schedule is going to hit Kazakhstan in 2026. So there's going to be a deferred effect there. So it's also another way, another parameter that supports the higher growth of 6+% this year. Meanwhile, the energy prices are moderating. We have seen particularly for the Brent crude, $65 per barrel, and this was the first time that was hit since February 21, and about 10% lower than where we were in April. So these lower prices offset the gains that of additional production. So the overall export revenues for oil is a little bit lower. Another factor is also about 60-70% of the oil exported by Kazakhstan goes to European economies, and there is a slight reduction or slowdown, let's say, of oil exported to the European countries because of the relative slowdown of the economies as well. So other sectors have overtaken oil and gas. This is good news for Kazakhstan as part of the diversification. And you can see the sectoral breakdown here in terms of the input. So historically, oil and gas attracted the bulk of the FDI. But inflows have fallen sharply. I have another slide which shows the large investments there. And in fact, net flows to oil and gas have turned somewhat negative in recent years as well because of the repayments exceeding the actual reinvestments. But in contrast, inflows are now concentrated in other sectors. Particularly ICT is important with the establishment of the new Ministry of AI is also important. A lot of investments there. We will see, a number of hyperscalers have been announcing or in discussions. Also, data centers are in a lot of discussions. And this shift towards more diversified sectors, signaling growing investor confidence beyond the extractives. This is an important point to note. So Kazakhstan stands to benefit from the global reconfiguration of trade and investment flows. This is quite important because historically, the number of the countries or the specific countries that were investing in Kazakhstan and trading with Kazakhstan is changing with the trends globally. There's also a little bit of diversification here, which is also good news. And you can see also in the top three, you can see the increased importance of India, United Arab Emirates, and Saudi Arabia. And then the recipient countries, particularly Egypt, Kazakhstan, and Uzbekistan, in our countries of operation, is a bit more pronounced. Now, this was the slide that you can see in 2016, the 36.8 billion of investments, expansion investments there with the red. And then 23 and 24 have shown quite a bit of FDI volume. And then, but the number of projects are also increasing. This is a key one because smaller investments in diversified sectors are coming in more, and this is a proof of that particular data. And here is the breakdown until 24. We need to update this. This is a hard data to hold on. This one I'm talking about. This is a hard data to collect on. That you see the breakdown of which specific subsectors in terms of the increased number of investment projects in Kazakhstan 23 and 24. The trend does continue in 25 as well. We will update that data, and hopefully next time we get together, I will show you the 25 as well. So Kazakhstan recorded a broad-based rise in the non-extractive investment projects. And the leading sectors there is the industrial equipment, transportation, and warehousing. Of course, Food and beverage is also very important as the consumer products. The next slide is a new one that we have worked quite a bit. It looks a bit confusing, but it actually is not. So on the left-hand side, we have the FDI announced between 2014 and 15. And on the left-hand side, you see UK, South Korea, Russia, other countries, China, Luxembourg, and India, and their investments into the region. And then you see 23, 24 on the right-hand side, and you see which countries and what investments are made into our region. And you can definitely see increased investments from other countries. You see also China, Germany, and Turkey and also the newcomer UAE is a bit more pronounced here. I will share the slides, by the way, later on, so that you can have a look in a bit more detail. And if you have any questions, please do let me know. Inflation. As I indicated, inflation is an important impediment particularly for investment as well. And a few points that I would like to mention here. So inflationary pressures across the region have eased, but for Kazakhstan continues to be very high. Policy rates remain tight in most of the economies and getting tighter, particularly for Kazakhstan as well. It's now 18%, and my personal opinion, we might be able to see one more increase even this year. So national banks prompt, certainly, and determined actions signals a very good set of actions, but this also needs to be taken with a pinch of salt. So you can look at central bank's actions, which is the main, or National Bank of Kazakhstan, of course, in this case, which is the main responsible party for price stability and inflation, but also it needs to be mixed well with the policy mix. So you need to have a structure that, or macroprudential measures that go hand in hand with each other. If you have a really high expansionary fiscal policy while trying to limit the with interest and inflation with high interest rates by the central bank, it might offset each other from time to time. And this is to a certain extent what we have been seeing in Kazakhstan. Finally, I want to look at the fiscal and external balances across the countries again. Kazakhstan do continue to have manageable, compared to some of the other countries, manageable fiscal and external balances, but it is coming under pressure. So declining commodity prices, strong government spending is going to lead to further weakening of the fiscal positions. And with the new budget and tax codes in Kazakhstan, which Erlan is going to talk about the tax code in more detail, is going to be very important to strengthen the revenue mobilization and regulating the transfers from the national fund. Obviously, this is important from a macroeconomic point of view, but on the micro side, impacting all of the companies, higher tax rates is going to certainly impact our businesses as well. And finally, let me come to the public debt and international reserves cushion. And for Kazakhstan, it's clear that that Kazakhstan has a lot of resilience with the high and well cushioned against the external shocks. Public debt continues to be low and stable. There's quite a bit of external buffers, that is including international assets and sovereign wealth fund assets, of course. They're quite high. So these are the underlying main parameters for being investment grade in terms of ratings as well. So these two aspects will continue to ensure strong resilience in the Kazakh economy during the periods like we're facing right now of strong external uncertainty and volatility. Let me leave it here. Thank you very much.
Thank you very much, Hüseyin. We will have time for questions, and I think the biggest question was whether you will share the presentation, and which you answered. All right. You did mention about the tax code and the new novels and ideas that the government has prepared for us. I think the business community is overly stressed about this topic, but hopefully Erlan will have some good news for us.
There's a mix of good news and bad news, obviously, but thank you, Hüseyin, for your very good presentation. I think it sets the stage for the next discussion, which is around the tax code, as Julie said. So the new tax code will be introduced from the next year. You have all seen the final draft, I'm pretty sure. So I'm not gonna sit here and pretend that I know much more than you do, but what we want to talk about is some of the most important aspects of the new tax legislation, which will impact the taxpayers. And my main message to you here would be to take this very seriously and, to make sure that we all understand that this is not just about changing the tax legislation, right? This is about us preparing for what's coming. Yeah. And I don't want to, paint it in a very dark colors, but generally, what we have to do is make sure that our systems, starting from the next year, are enhanced and well prepared for us to process the new tax code as part of the overall legislation applicable to us in terms of compliance and regulatory and compliance. But more importantly, our internal processes are set up such that we're, as I said, well prepared to deal with whatever challenges that are coming our way as a result of introducing this piece of legislation. Right, so let me start off by discussing VAT, which is obviously something that everybody is well aware of. For some reason, this slide is empty. This is not how it was designed to be.
Maybe it will come later, yes.
Yeah. Yeah, this is for dramatic effect, right? So,
Yeah.
okay, so here's the drama. And it's coming slowly, step by step. It's giving us time for, for preparation, obviously. But anyway, so I'm not sure if you all can see this slide, but there is some reflections from the new compliance obligations that you'll have to comply with as part of the new tax legislation. But this is not what I wanted to talk about, really. This is just to give an idea of what's coming in terms of, extra compliance burden. But the main problem with VAT is that we still lack neutrality, right? We can talk about the increase in the tax rate, which is, obviously everybody is aware of, is going to increase from 12% to 16%. There's been a lot of discussion whether we should make it 20 or 18, or whatever, to bring us in line with most international, best practices, such as in Europe. And obviously, as the tax authorities or the Ministry of Economy in this case, who is responsible for drafting the substantive part of the tax code, claims that we have a budget problem, as they call it, which needs to be resolved. And if we do not properly address it in the next few years, at the expense of tax collections in this case, obviously we're going to be facing a much bigger problem, 5 to 6 years from now. So that was the sentiment coming out from the Ministry of Economy, which we all understand on one hand. On the other hand, when we talk about increasing the VAT rate, we all understand that the problem here is lack of neutrality, right? The rate itself is a matter of policy. It could be 12%, it could be 16%, it even could be 20%. As long as VAT is neutral, and by neutral, I mean that VAT is a transparent tax. So when you pay VAT on your inputs, you got to be able to offset that VAT against whatever output VAT you collect from your customer or your client. Unfortunately, in Kazakhstan, it is not always the case. And this is, based on two major problems. One, in those cases where VAT is clearly offsettable or refundable based on the law, the problem is that the tax authorities normally come up with all kinds of reasons to make that process much more difficult, right? So not always, unfortunately, we're able to offset or refund VAT, even though the law gives us that right. And most of us in this room, I'm pretty sure, have dealt with that in the past, and in the present, obviously. Now, another thing that, or the other reason as to why we lack neutrality VAT is that in certain cases, it is legislated that we're not able to offset VAT, which will incur on business on our business inputs, even though we conduct a perfectly legitimate business operation. Yeah, and I'm talking about, for example, providing services to a company that is outside of Kazakhstan. And this could be any type of service, consulting, financial, IT, you name it, right? So unfortunately, this type of operation is considered to be, outside of Kazakhstan. So the place of supply of this service is not in Kazakhstan, which is why whatever VAT we incur locally in relation to the provision of the service, and there could be all kinds of expenses that we incur, that VAT is not offsettable. So this way, it's not neutral to us, right? So unfortunately, we are, losing money on this, to put it simplistically. And this is not the only example, right? There are many other examples, such as, applicable to re-exports, selling of sales of goods outside of Kazakhstan. There are many others, right? Which unfortunately preclude this place from becoming what the government has always wanted us to be, a hub. Right. So the president has said on many occasions that we want Kazakhstan to be a hub for Central Asia and the wider region, Caucasus as well. Yeah. So we want multinational companies to create their subsidiaries here in Almaty or Astana or elsewhere in Kazakhstan to act as a hub for sourcing services and goods to other parts of the same company in the wider region. Unfortunately, this may not be happening to the full extent, because unlike many other countries, including countries, that are neighboring with us, in Central Asia and wider region, Kazakhstan is is disadvantaged because we have this legislation, and unfortunately, the new tax code is not improving this legislation. Now, the main problem with the increase in the tax rate, is not because all of a sudden we go from 12 up to 16. So it's not an optical issue, right? It's a real problem because in those cases where VAT is not offsettable or refundable, for whatever reason, be that legislated or because the tax authorities are being difficult about it, this 4% will go to your cost. This will be an incremental cost, right? So it increases the cost of your business, cost of doing business here in Kazakhstan, which is obviously a major issue for all of us. Now, the tax authorities, on the other hand, and the Ministry of Finance in particular, who are responsible for drafting the administrative part of the tax code, they have said on many occasions that they will do whatever it takes to make the administration easier, right? They'll come up with rules and procedures and also practices that will allow us to enjoy offsets and refunds and the rest of it, to a fuller extent. Obviously, this is yet to be tested. At the very least, we all have had unfortunate experiences with the tax authorities where we were not able to offset or refund VAT at the very least. And like I said, there is this issue of VAT not being offsettable in principle in certain cases, which I've just mentioned, which is not being resolved by the new tax code. Now, EY has done a thorough analysis looking at 14 countries, including countries in the region. The results of which have been provided to the Ministry of Economy with the idea that they take this on board and maybe improve the legislation such that it becomes a lot more favorable to VAT payers. Unfortunately, thus far, nothing tangible has happened. We continue pushing. Maybe something good will come out of it, but thus far, like I said, the result is unfortunate. Now, this is all about VAT, right? I just also wanted to mention, obviously, introduction of 5% VAT on imports of pharmaceuticals, which is a major shift in this industry. And unfortunately, whilst on one hand we're aware of the tax code the VAT rate being increased, on the other hand, there are many uncertainties which still remain unresolved, right? So in this particular area, but I'm not going to dwell on that too much. So that's all I wanted to say about VAT. Now, the reason I spent some time talking about is this is one of those things that everybody is aware of, everybody is concerned about, and we're yet to see what happens in real life, right? Okay, so, right. Next slide. This has to do with withholding and personal income tax, and there is good news and bad news here. So the good news is that any distribution of dividends, inbound or domestically, up to 230,000 MCI will now be subject to 5% withholding or personal income tax. Yeah. So this is good news compared to what we had before. Yeah. And this stimulates reinvestments and shareholder return, obviously. So it's good. Now, in terms of personal income tax rate in general, as you know, it will be increasing from 10% to 15%. Currently, we have this system of flat tax rate where 10% applies to all kinds of income, regardless of the amounts received. Yeah, so starting from the next year, they're introducing the so-called progressive tax scale, with the top marginal rate being 15%. And the extra, the 15% will apply to annual excess of 8.5 thousand MCI, right? So anyone making more than 37 million, and I'm using the current exchange rate here, yeah, anyone making more than 37 million tenge per annum will be subject to 15% on the excess. Yeah, so this is how the progressive tax rate works, right? Okay. Okay, so stuff is still appearing on this slide. I'm not going to wait for it to get filled up. Let me just, okay, I'm sorry. Yeah. The next point has to do with domestic withholding tax rate on interest from loans and debt securities. So there's been a reduction from 15 to 10%. So this stimulates cross-border financing. Anybody who is interested in attracting loans from offshore, yeah, or issuing debt securities, obviously will be enjoying 10% rate now versus 15%, as it applies before the new tax code is introduced. So this is good news. Next one has to do with CIT deductions or corporate income tax deductions for companies purchasing goods and services from small businesses that apply special tax regime. You know how some of our small businesses are qualified, qualify for this special tax regime whereby they, follow a very, very simplified compliance system that is applicable only to them because of the size of their business, right? So what the new tax code says now is that companies purchasing goods and services from such suppliers who are on special tax regime will not be able to deduct this cost for their corporate income tax purposes, right? So this is done basically to discourage, small entrepreneurs using this regime. Yeah, and in the eyes of the tax authorities, this, mechanism has been used for years by small entrepreneurs to avoid paying VAT or other taxes to the budget, to the full extent, which is, what they decided to do is failing, to basically fight some of those schemes which are or were indeed in place, by some of the taxpayers who were probably not, supposed to be on simplified tax regime by design. However, it happened. So failing, combating that, the Ministry of Economy came up with this very simple idea. So through companies that purchase goods and services from these simplified tax regime pairs, they decide to administer this issue such that, by disallowing us to deduct the underlying cost, they will pretty much discourage companies from using, these service providers or vendors, going forward. Obviously, for those companies to whom it is not just inconvenience, because for some of us it's just, a couple of providers, right? But for some companies, it's a model of their business. And obviously, this poses some very serious questions, when it comes to companies that use such vendors and service providers to a larger extent. There will be some exemptions, and they will publish them in due course. Hopefully, these exemptions will cover the wider population of these vendors and service providers, but uncertainty still remains surrounding that issue. So we're all waiting to see what happens with impatience. right? Now, good news again. Many of you know that in the current tax code, in Articles 666 and 667, there are certain requirements that taxpayers are supposed to meet in addition to the normal requirements which apply when you seek double tax treaty provision, when you seek double tax treaty protection, right? Now, these requirements currently state that, apart from providing the tax residency certificate and other documents which are necessary for you to basically be able to use the double tax treaty, you should also be able to prove to the tax authorities here that the recipient of the income payable from here, such as dividends, for example, is included in the overall aggregate taxable income of the recipient, let's say in the Netherlands, and is subject to a tax rate no lower than 15%. So this was introduced some time ago, effectively denouncing some of the double tax treaties because you can't really meet that requirement. In most cases, such income is exempt, resulting from participation exemption, let's say in the Netherlands or many other European countries, right? And not includable in the overall taxable income. So it has, has taken us some time. EUROBAK, particularly the tax committee, and myself have been involved heavily in the discussion with the Ministry of Finance, arguing that this requirement shouldn't have been introduced in the first place because it doesn't make any sense. So they promised, there was this letter that they issued saying that, this provision really doesn't apply. And on audits, they promised that they wouldn't really apply it. On the other hand, as long as it is in the legislation, we're very concerned that at one point in time, the tax authorities will start applying it. So what happened, again, as a result of our discussions with the Ministry of Finance and the Ministry of Economy, they have dealt with this issue as part of the new tax code. These articles will not be they will be in the new tax code, but they won't contain the same regulation, which is why, we can, it will be safe to say that, we'll not have to meet this extra requirement in the tax legislation for us to be able to seek double tax treaty protection when we pay out dividends to foreign shareholders, right? Thank you very much. Okay. See, I get excited when I talk about the new tax code, yes. And it impacts my voice and sometimes my mind. So anyway, I wanted to bring this to an end by laying out some of the action steps that we recommend everybody to take, and we recommend that you start now. Because as I said, the tax legislation is coming. It will take effect from the 1st of January next year. And for us to be well prepared and be able to deal with the challenges imposed by the new tax legislation, we would recommend the following steps, right? First is that your tax strategy and the contractual framework should be adapted to the new tax legislation, right? So you should enhance your compliance by introducing robust risk controls and reviewing pricing and contracts to reflect the new requirements, right? So protective clauses that we normally include in our contracts with our suppliers, should become a standard, right? You should always have a clause in your contract that protects you from any adverse tax implications to the extent possible, obviously. Second, your financial planning and budgeting should be aligned to the new tax legislation. So the changes that will be brought about by the new tax code will impact your bottom line. So you need to conduct a thorough impact assessment. So you need to update your cash flow and budgets to account for the new tax obligations and revisit investment plans to ensure they remain viable under the revised 2026 fiscal landscape. And finally, we should continue the dialogue with the government as part of EUROBAK, and not only EUROBAK, but any other major business association, to be able, on one hand, to understand better the regulations that will be brought about by the new tax legislation, because, as I said, we still lack practical experience for one simple reason. This hasn't happened yet. So there's going to be a lot of discussions with the tax authorities and the Ministry of Economy on how these rules apply, right? And I would encourage everybody to be a very active part of this, policy dialogue, particularly here in EUROBAK. We have a very strong tax committee that normally, deals with these issues, but everybody is welcome to contribute because you guys will have practical experience in those areas where nobody else could, potentially have them, right? So that's all. So before my voice completely lets me down, I would like to finalize on this note, and I would be happy to answer any questions afterwards. Thank you very much.
Thank you very much, Erlan. I'd like to add that tax committee co-chairperson Dmitriy Drokin is here from EY, and later we can go into discussions, and if we don't have time, do it around the table. You're more than welcome to talk to Donik. We have sent a number of letters to the tax authorities, and just recently also we've created a chat that brings together all international business associations that are present here in Almaty, and through that we are coordinating our actions with other associations. I know that AmCham has sent a similar letter. So, and also on the 12th of November, on Wednesday, Erlan will be talking at EU Kazakhstan platform, and tax issue will be raised. This platform of the EU diplomatic community meets with the Prime Minister of Kazakhstan, and businesses invited. So Erlan and myself will be attending that and voicing these issues in particular as well. So as Erlan mentioned, we can discuss that a little bit later, but right now we'd like to pass the word to Dmitriy Drokin, and let's talk about the FMCG sector, which probably will be most affected by the changes that are to come.
Yeah, thank you very much. So first of all, I want to thank EUROBAK and Coca-Cola for organization such a great event where we can discuss the pain points of Kazakhstan and see where we are as manufacturers and the business. So before I will start, I want you to focus on the three main numbers. So you can see on the slide. The first one, that is FMCG sales in money terms. Now it's around $6 billion, with increasing by 11% versus last year. The second important number is that 50% of income of Kazakhstani consumer is go to the FMCG products and goods. And now 36% of our customers in Kazakhstan are switching for the cheaper brands. And this is the answer for double-digit inflation. And usually we start with the macroeconomy. So you'll have the overall view. And I think it's Serkan was mentioned that the economy of Kazakhstan is pretty optimism in forecasting, and I try to follow this idea by numbers. If we put the Kazakhstan on the global map, we can see that Kazakhstan economy is growing much faster than economies of Turkey, Russia, and even global average. So we're growing about 5% in 2025, and IMF saying that it will slightly decrease for 4.9% and still be bigger than global average. And now at Nielsen, we're saying that such countries as Kazakhstan and Uzbekistan, they're engines of the economic growth, because both of these countries are in top 5, the fastest growing economies in the world. At Nielsen, we like to compare things, trends, and here you can see that we compare Kazakhstan with different countries. For example, we took Kazakhstan, where we have very young population. The size of a family about 34 people, and the average age is about 32. We do have 70% of Muslim population, and it's very similar to our neighbors of Uzbekistan, and it's also very similar to the Indonesia. But here, all similarities stops, and we see on the developed Poland market that we are much closer to them in terms of the salary, average salary, which is around $900, and GDP. But the main thing among all of these four countries, Kazakhstan are spending 50% of their income on the FMCG goods. And you can see, like, if you talk about four countries, this is the highest number among them. Okay, we know how much do we earn, but where do we spend? And you can see that the split between modern trade and traditional trade is almost like 50-50. Modern trade is like now 55%, but I want to bring your attention to traditional trade, which is like growing faster, around 12% versus last year. And here, Kazakhstan is also much more closer to the developed Poland market, where the modern trade is around 74%. Uzbekistan and Indonesia is truly traditional trade countries. Also, we know that the small and impulse stores take the biggest part in number of stores in Kazakhstan, but please look at the petrol station. This is like the small channel, but the highest growth is there. Also, if we see that modern trade is now growing and take more than traditional trade, at NielsenlQ, each year we're doing the store equity index, which is showing in which stores people are willing to buy more, spend more money, and even spend more time to go there. And we have only 3 chains in Kazakhstan which are showing the index above 1. It's Magnum, Small, and Solnichny. And Hüseyin was saying that inflation is like the highest among all the region. And here we also can see that IMF saying that average inflation in Kazakhstan in 2025 would be around like 10%. And even in 2026, it will be also 10%, but I think they didn't make any changes regarding the new taxation. It still be much higher than global average. And even if you look at the Uzbekistan, where the inflation is about 8% going down to 6%, next year, we really have like the highest inflation in the region. But before I was mentioning that we have very young population in Kazakhstan, and quarterly analysis of like our customers showing that people are optimism here in Kazakhstan, and they are still want to spend some money and not afraid of the inflation. So what would you do in the country of double-digit inflation? Me personally would reduce expenses, as like 70% of the people that we asked did. And people are decreasing expenses, first of all, on the eating out in cafe and restaurants, spending less on food deliveries, and what is more important, for the switching to the cheaper brands. So the 36% in Q3 2025 are saying that they're looking for much cheaper brands. And this is not only story of Kazakhstan. Globally, in average, also 70% of the consumers are trying to save money on FMCG goods. And like exactly the same 36% are looking for some cheaper brands. E-com is coming to Kazakhstan in like 5 years, I think, and now the StatGov is saying that it's already like around 14% in all goods and services in Kazakhstan, and even more, like around 200 billion tenge in 2024 was spent on the FMCG goods by Kazakhstani consumer. And talking about the e-com, we cannot forget about AI. We did the study and found out that 60% of consumers now daily using AI assistants. And from 13% to 21% is saying that they are willing to look for the recommendation and even spend more money with AI recommendations. And here we have one local trend. that 80% of economically active population in Kazakhstan have microloans. People here love to have them. And what is important is that 25% of them are taking these microloans for the food, FMCG food, to pay for that. And maybe non-local people will think that it's like something not really good for economy, but taking an advantage that like we have double-digit inflation and people just want to have like here and now and pay later. And at Nielsen, we're not looking only the just clear numbers on the retail audit and not only asking consumers. We really like to ask our partners and customers. And we had the CEO survey in end of 2024 asking, was 2024 successful for your company? And 70% of the CEOs said that yes. So that means that 70% of the companies are met their objectives. Of course, there were some problems like volatile tenge exchange rate, the problems with logistics, and we still have lack of qualified employees, but almost 52% of CEOs are saying that 2025 would be also successful and FMCG market will grow by 10%. And if you remember my first slide, the FMCG is also, it's now growing by 11%. So they were pretty close to this number. Also, we like to call now Kazakhstan developed market. And here's the reason why, because on the above part of the slide, we see that the volumes in global FMCG are growing. Of course, the values grown because the prices are growing each month. But below you can see the Kazakhstan, and Kazakhstan volumes of FMCG is following the trend of global consumer spending. But do you remember that we're spending 50% on the FMCG goods? And here is the reason why. Because in Kazakhstan, prices are growing 3 times faster than in a global average. Who are the main players in the market? You can see that most of them are the beverage companies like Coca-Cola, Pepsi, FS, Carlsberg, RG brands. Also, we do have like 2 tobacco clients in top 10 manufacturers, GTI and Philip Morris, and only 2 local brands here are RG brands and Первый Пивзавод. Most of that manufacturer has factories in Kazakhstan, which means that they're investing in Kazakhstan, and this is pretty good for us. I was talking about that people are switching for the cheaper brands, and one of the answers for that is that almost 70% of the respondents saying that they would prefer local manufactured brands in Kazakhstan. They think that it brings the prices for these local manufactured products are cheaper, but there also a lack of assortment. And even our government started to protect local manufacturers. In May, they issued the law, which said that 50+% of the shelf should belong to the local manufacturers. And I think in like several months, we will see how it will change the game here in Kazakhstan. And to finish my presentation, here is like some very important key messages so you can bring out of this room. Is first of all, for the manufacturers, it's very important to have the answer for inflation. So you need to have like all type of the price segments in your portfolio. The second thing is that FMCG volumes are growing now in Kazakhstan, and please take a look at the growing channels like petrol station. The localization of brands here might play very important thing, as like even government starting to support it. And by localizing, printing some local prints on the brand might give you additional consumers and AI influence of the sales. So if you would play in all open sources, the AI assistants would recommend your product and you can bring much more consumers to your goods and services. That's it from my side. If you have any questions, yeah, you might ask.
Thank you very much, Dmitry. According to the agenda, we do have time for questions and answers. I suggest we have an open discussion. We don't have any media or we're not going to do any publicizing of the questions or the discussion. However, we do stop the live streaming that is going on to Facebook and LinkedIn. But those who are in Zoom, they will remain with us. Yes, please.
I would like to ask a question. First of all, thank you all the speakers. And especially in Dmitry's presentation, there is one pager about the microloans and which looks